With the Olympics medal chase over, property in New Zealand has stepped up to the podium. Property Council New Zealand analysis shows property is officially New Zealand's largest industry, making a direct contribution to the country's GDP of 41 billion, 15% of our total GDP. Meanwhile, latest MSCI data ranks New Zealand second in the world behind Norway for total commercial property returns over the past 12 months globally. Our broader commercial property sector returned 15.9% as an annualised return in the 12 months to March 2021. Against peers like Australia, the USA, UK and Canada, New Zealand is a standout high achiever, and as a small country at the bottom of the globe, our property market continues to operate in its own bubble. We've seen New Zealand-based investors benefiting from closed borders. Domestic buyers, including syndicators and listed entities, accounted for 82% of transactions above 20 million in the past financial year, substantially above pre-COVID levels of around 53%. The syndication market is now raising more capital than ever at a tighter return, with its market share growing by 19% since COVID and allowing retail mum and dad investors greater access to institutionally grade assets. The unprecedented wave of equity we've seen enter the commercial and industrial sector since Q3 2020 also underpins strong capital growth. Stockpiles of dry powder from the listed sector, term deposit withdrawals, offshore ultra-high net worth individuals, KiwiSaver funds and closed and private equity funds look set to support asset values into 2022. Kiwis' passion for online shopping and the associated rise of urban logistics means the industrial sector has been resilient despite global economic upheavals. More than 9,000 new e-commerce stores opened in New Zealand in 2020, and NZ Post says online sales accounted for 11% of all shopping nationwide last year. Last mile delivery will become even more important for consumers and will further enhance industrial property's appeal. Looking at the office sector, core assets with strong covenants and WALTs are still in demand, and total returns remain largely consistent with long-term trends. There's been no wholesale exodus by office tenants, and a recent Bayleys office occupier survey found that more than half would stick with the status quo, 30% would increase their floor area, and just 13% would decrease space. This highlights business confidence and the importance of physical office property for culture and collaboration. This edition of Total Property features 73 commercial and industrial property opportunities for sale around New Zealand. We also look at the growth of West Auckland, urban logistics and e-commerce, and the off-site construction sector. If your commercial and industrial property portfolio needs a realignment or a boost, talk to Bayleys before the year runs out.